Finance.
Hey, what's up, everybody? Welcome to the Mad Fientist Financial Independence Podcast. It's been a while since my last episode, so I'm really excited to be back. Now that I've finished writing the code for the Phi Laboratory software, I'll hopefully be producing more of these episodes. So, speaking of the Phi Laboratory, if you haven't checked it out yet, head on over to lab.madfientist.com to take a look. Over 1,000 people have already been using it, and I've got some great feedback so far. So if you want to track your progress to financial independence and find out when you can expect to get there, head on over to lab.madfientist.com to sign up. I'm really excited to introduce my guest today, Billy Murphy. Billy is an ex-professional poker player who now writes about entrepreneurship and business at his blog, foreverjobless.com. There are a lot of people out there that write about online business, but I have to say that Billy is by far my favorite. He doesn't write often, but when he does, he delivers these long, incredibly detailed posts that just blow everything else out of the water. Billy's here today to talk about his poker days and his experience investing in online businesses. And it's the online businesses that I'm really excited to chat with him about for a few reasons. Like a lot of you out there, I'm a software, web, technology guy, so the idea of investing in online properties for recurring cash flow as opposed to physical real estate really appeals to me. When you consider the fact that some online properties are selling for 1 times annual profits, the idea gets even more exciting. To put that in perspective, how would you like to fund $2,000 worth of monthly expenses with a single $25,000 investment? That sounds pretty amazing to me. So yeah, without further delay, let's chat with Billy to find out how that's possible. So Billy, thanks a lot for being here.
Yeah, thanks for having me on.
Yeah, so your site's mainly for the entrepreneurial crowd, and since mine's a personal finance site, it's possible that my readers maybe don't know too much about you. So could you just tell a little bit about yourself and what your site's all about, and just give a little background.
Sure. So my site's foreverjobless.com. Quick background on, I guess, my work history is I was a professional poker player for about 4 years after college, and then started a poker training company to basically train people how to make more money playing poker. That led to, I guess, me being in the e-commerce space. That the poker company was run relatively passive, had somebody doing operations for that, so started doing e-commerce stores. Bought and started probably 15 to 20 of those, and they were all really small dropship stores. And then started Forever Jobless in I think 2012, just kind of talking about some of the businesses I was involved in, kind of breaking down different entrepreneurial theories, and showing what's worked for me, what hasn't worked for me. Then I launched, or I guess in the last 6 months or so, I've started investing and advising in basically small businesses online, basically companies that need funding, need advice, need intros, that type of thing. So I started doing a handful of those, and then I guess most recently I'm doing a podcast. Basically, the same things I talk about on Forever Jobless, just different entrepreneurial topics and case studies, and yeah.
Excellent, yeah, and if people haven't checked out Forever Jobless, it is by far my favorite site in this space. Most of the make money entrepreneurial things, it's all based on things like ebooks and just crap that doesn't seem like real businesses. But you have such a unique perspective, and I think a lot of it comes from your poker background as well. So let's dive into a little bit of that. How long did you play professionally for?
So I did it professionally for about 4 years. I had played, I guess semi-professionally or part-time income for probably maybe 4 to 5 years prior to that. So I was in college when I started playing. So I think I started playing, I guess it was sophomore year. So I guess I would have played 3 to 4 years before I became full-time pro.
And did you just get burned out and decide to move on to other things, or was it the fact that you enjoyed setting up Bluefire Poker, which is the site that you mentioned before? Did you just have so much fun doing that you thought, well, hey, I can make just as much money being an entrepreneur as I can playing poker, and it's a lot more fun? Is that how it went? Or
Yeah, the plan was always to start businesses. So I didn't get into poker thinking I would do that for 30 years or anything like that. Poker was an awesome job, but it was still a job. It was a grind. You basically had to put in the work. It wasn't passive. And so, I did poker to build up capital to allow me the flexibility to start businesses and have the capital to do it and have a cushion for a while out so that, I didn't have to worry about much. I loved playing poker, but it did, if somebody had said, hey, let's go play poker for a week, I wouldn't be interested at all because I played so much poker over the 7 to 8 year period. I was playing almost every day. And so once you do that for a while, it becomes less of a game and more of a just strategy. You're sitting down to try and make money. So
right, and it's that strategy that helps you succeed, I think, a lot in business because one of your most popular posts, EV Millionaire's Math, where EV stands for expected value. Expected value is huge when you're playing poker because you're just, maximizing all these small little edges you have, and you do it enough, you'll end up making money. And you sort of use that same philosophy in business. Could you just talk a little bit more about expected value?
Yeah, definitely. Yeah, so like you said, I basically got the background on expected value from playing poker. I mean, it's a really common term in poker. It's basically any decision you could make, there's a expected value from that decision. So whether it's a poker hand, whether it's someone's job, whether it's a business venture, there's an expected result that you can expect. And that's a better way to explain it. But basically, there's an end number. So if we're talking about money, there's an end number that you can calculate to figure out what you could expect to make. The way most people make their decisions are very emotional. So basically, calculating expected value gets you to a very logical answer of what you can expect, and then you know the correct route to go. So in other words, to give an example, if you and I flipped a coin and we each bet $1, you bet heads, I bet that it'll come up tails. We're betting $1. Our expected value is $1, right? The winner's gonna get $2, but we each put in $1. So basically, it's a neutral EV. There's a zero expected return in that case because it's 50-50. So same concept for people in a job is, let's say someone's job makes them $50,000 a year, and let's say they're debating whether or not they should start a business. Well, if you're debating whether to start a business or not, the way most people do it is, hey, it sounds risky to leave my job. I might lose all my money in a business. I'm just not going to start a business. I'm going to stay in my job. But that's an emotional decision. So a logical decision would be to calculate an expected value from the business. And the way to do that is obviously doing due diligence. For me, I try to calculate out, a top end number. If this business opportunity did really well, here's what I would expect. And I'll calculate another conservative number. And I'll calculate like a really bad case scenario. And then I'll allocate a certain percentage to each of those things happening to allow me to come up with an expected value for the business. And then I'll look at it compared to other opportunities and say, okay, so for example, the person looking at leaving their job would say, okay, my expected value from the job is $50,000. But if I start this business, my expected value is, $74,000 based on this math. So they would know, okay, so mathematically it's better to try and start this business, where the way most people make decisions, they would never get to that point. They would have to make an emotional decision. And emotional decisions usually lead you away from any sort of short-term risk, where lots of times that's bad. So for example, there's a big difference between risk and variance. So a lot of people get confused with thinking that variance is risky. In other words, I've started businesses that have close to zero risk. Some of the investments I make now have close to zero risk. Like there's almost no way I can lose money on them, but there's a high upside side that I can make a lot of money. But most people would look at these and say, wow, that's risky. You're risking X amount of money to put into this deal. What if you lose it? But I've already done the math to know what the EV is. And so the only thing they're talking about is more short-term variance. Like what if, once in a while I lost on the deal? However, avoiding all these, plus EV opportunities, all those people are basically guaranteeing themselves failure long-term compared to if they just got into plus plus EV opportunities over and over and over again.
Yeah, absolutely. And to bring it into something, the personal finance crowd may recognize more, it's like being in cash versus being in stocks. Yeah, stocks have a higher variance, but the expected value over time is a lot greater. So,
Right.
Yeah, you could stay in cash and be safer in the short term, but inflation's going to eat at you, and then before you know it, your money's not going to be buying hardly anything that you needed to. And whereas if you go in the, quote, riskier, asset, then you'll end up having a lot more money at the end of the day. So. Yeah, this leads to another one of your great articles called Entrepreneurial Divorcification. And so, yeah, if you could talk a little bit more about that.
Yeah. So, the way a lot of people do it when they're first starting out is, hey, here's 5 to 10 ideas I have for businesses. I'm just going to start them all. And doing it that way, there's almost no chance in the world that one of those is going to blow up and be a really big business. Reason being, so let's say you took 10 business ideas and you tried to start them all and at the same time, and you basically, at the maximum, your best idea is going to get 10% of your time. And so the idea that could have done really well is going to get 10% of your time. And then on the back end side of it, let's say each of your business grew to $100 a month. They're all maybe they're all passive even, but the actual asset value is very, very low in terms of a multiple compared to if you built an authority business up. So in other words, if you had a business making $1,000 a month and it was an authority business in the small space that it was in, it would sell for a higher multiple than just a tiny microsite that's not an authority, could be wiped out at any time. A lot of those businesses will sell for 12x or less monthly income, where a business is viewed as an authority business that has it's also a less risky site, would be viewed at a much higher multiple, anywhere from 12 to 36 months, depending on obviously the type of space that it's in.
Okay, Dale, let's talk about multiples actually, because this is really exciting stuff for people on the path to financial independence. And for me personally, I'd contemplated investing in real estate or things because I have a sizable amount saved up, and I'm looking for consistent income and things like that. But I don't know anything about real estate. I don't know anything about home maintenance or any sort of I don't have any of those sort of skills. So then that led me to think, well, maybe I should invest in online properties, because I've been a professional software developer for the last 10 plus years. I have a degree in computer science. This is the stuff I know, and it could also create this type of income. So when I started looking into it, and seeing things like 1x annual income is what some of these sites are selling for, it's like, whoa, that's like buying a $120,000 house and charging $10,000 a month in rent. So it's like, right. There's definitely some opportunity here. So yeah, if you could just talk a little bit about your experience investing in online properties, and how you got started and where it's led to today.
Sure. So yeah, in 2011, I started basically buying and starting from scratch, just a bunch of small dropship stores. And the first one I bought, I had no idea how to do it. I had a buddy in eCommerce. He was doing really, really well. He had actually never bought anything either. He'd started from scratch. So he told me to jump into it, try it out. And so I went to Flippa. Flippa buys, you can buy and sell small websites there. And there was one that caught my eye that was, I think the buy it now price for it was $6,000. And it was making like $900 a month. So I didn't understand why he would sell a business that was doing that well, and it was passive, for that cheap. So basically everyone in the comments of the auction were saying, there's got to be something wrong with it. No one would list a buy it now, for this site if it was accurate, if these numbers were accurate. And I don't think at the time the seller had included enough information. So what I did is, I called the seller. I emailed and said, hey, let me get your number. I'm interested. And called her, found out she just had to sell it really quick. I had her send me, the sales numbers and the analytics and all that. Excuse me. And so I did my due diligence really quickly, and I said, I'll do this if you lower the price she had to sell it very quick. She lowered the price to $4,000 for me, and I bought it. So basically, a site that was making $900 a month, I bought for $4,000. And I didn't know what was going to happen. I said, maybe I'll buy it and everything will drop out, and I'll lose my money. And so I did, what I do every time. I just did a quick EV calculation, and said, and this was kind of an obvious one. It was so low, but I said if 50% of the time I lose all my money, I lose $4,000. And but the 50% of the time that this is actually a legitimate business, I'm going to make 10,000 plus per year passively, and I'm going to get experience with e-commerce. And so this was kind of a no-brainer. I mean, it wasn't even close to whether I should try it. I didn't think it was going to flop 50% of the time. And so I bought it, wired her the money, and sales started coming in. A few months later, probably 4 to 5 months later, I'd made all my money back already. Didn't have to do anything really. It was the average price point on that business was it was a baby furniture store, and the average price point was like $300 or something. So I only had to make like 10 sales per month to make roughly $1,000 a month. It was like 10 to 12 sales or something. So it was a super passive business, all drop ship, and then I just kept doing that. I kept buying stuff, and that's an extreme example of a low multiple. Usually stuff doesn't sell that low. Mm-hmm. But yeah, I just kept buying stuff, kept starting stuff. And I guess within 8 or 9 months, I had probably 15 to 20 going. And I was just kind of amazed at the low multiples you get. And like you said, it's the same as, you look at real estate, you may have to put a $25,000 down payment to get a $100,000 house, where then you're going to expect, so people say, oh, you can leverage real estate, so you're going to make more money. And sometimes that's true. My brother does real estate. He does really, really well. He leverages and does all sorts of refi cash outs to reinvest the same money in new deals. But with online businesses, you can do it very, very quickly for very cheap. So in other words, let's say you put down, for a cash flow business, let's say you put down $25,000 in a real estate deal to get a $100,000 house. Maybe you're going to cash flow a few $100, in a good case scenario. Mm-hmm. And then you look at an online business, man, if you put down $25,000 and you're maybe not going to be able to leverage a deal that small, so put down $25,000 cash for, but you might be able to get a site that makes $1,000 to $2,000 a month. So you're going to make at least 5 to 10x cash flow on it. But the other big difference is, here's the thing with real estate. If you buy a single family home, for example, your upside is so capped. And what I mean by that is, if the only ways to make more money on the deal is, maybe you increase rent next year by $25 a month or $50 a month or whatever. So yeah, you can maybe increase the amount of money you make a little bit, but it's going to be so tiny to where with an internet business, let's say I buy a site and it's making, $1,000 to $2,000 a month. And I can say, hey, well, I have all these customers. Why don't I create a new line of product, or, why don't I, spend some money on advertising to see if we can scale the profits of the business. And so, with an online business, maybe I can turn that business from making, let's say, $1,500 a month to now it makes $3,000 a month because I put some work into it. So now I not only increase the cash flow, but I increase the asset on the back end. So instead of, my $25,000 when I go to sell it, maybe now I flip it for $50,000, where your chance of, doing it so quickly in real estate is slim to none. So, I've done real estate myself. I bought some stuff a couple years ago. I happened to get crushed because I bought it the wrong time. I bought in 2006. But now I do some real estate investing, but it's through people who do real estate for hard money loans. So basically it's, I get paid like, 16 to 18% on my money. But there's no work. It's 100% passive, because a lot of people look at real estate and say, oh, it's passive, but lots of times it's not 100% passive. But as a hard money lender, it's 100% passive. And all you have to do is just make sure your money's secured against the assets you're putting into. In other words, just make sure it has enough equity. So if the deal falls apart, you're still protected.
Nice. Yeah, that sounds good as well. So yeah, to go back to the e-commerce stuff. So So you started in e-commerce. You built up a big portfolio of e-commerce sites. Have you ventured out of that space into other sort of online properties, or?
Yeah, so I basically sold off most of those. Reason being, it was not the way I would do it if I did it again. I would have just started, like we talked about with the diversification stuff. There was so much stuff to manage that it would have been easier to have one business that somebody could manage for me. Where there's 15 to 20 different ones, it was a lot of work for sites that weren't necessarily making a lot of money.
And now you've transitioned into what type of online investing?
Yeah, so mostly what I'm doing now is investing in deals like, I guess no specific niche, but deals that need capital and need advice. So for example, I invested in a startup design company. And so put money in, helped them strategy wise, helped introduce them to people who needed websites done. We put a big amount of money into advertising through AdWords and through things like that to try and get them initial traction that they would have had to wait a long time to get. Another deal I just invested in was a e-commerce business that they get their stuff from China. They needed money for more inventory. They needed money to buy media. They needed money to, now we talked and decided to do a second line of what they were doing. So, we're doing, creating a prototype, going to be buying inventory for that. So basically the deals I'm looking into, I guess you could almost look at it like, kind of like how a venture capitalist would do it, or incubator, kind of a combination of those, but on a very small level. So the deals I'm investing in would be seen as uninvestable deals. So I'm looking at businesses that maybe need like 10 or 20 grand, and they're very small. The upside on these deals, they're not going to be $100 million company like most angel investors or venture capitalists invest in. These deals are, an e-commerce store that's making $3,000 a month, where with a $20,000 cash infusion and some advice, could maybe get to the point where they make $30,000 a month. So it's the type of things where the upside is not going to be a huge sale on the back end, but at the same time the return on money is potentially extremely big for two reasons. One, because of the fact that no one invests in businesses like this, and two, because my downside on these is pretty safe. I mean, most of these deals are either already making money and or they're very easy to get them to make money. Like the design company, for example, that's a company that even if it doesn't go well at all, like it's gone really slow at this point, even if it just flopped completely, you don't really need much money to break even on doing design work, because you're basically just buying advertising and paying for expenses and things like that. So where the e-commerce store is already making money, so the downside is it can essentially make back my money even if we didn't scale it in a worst case scenario.
And obviously, I don't think you could find opportunities like that on Flippa. This is probably coming from your network of people. Is that how these other deals came about?
Yep. So these two specifically, the first guy from the design company was an intern for me, and I actually met him at a conference meetup, entrepreneurial meetup, like 2 years ago. Then he wanted to become my intern, and so he was my intern for a little bit. And then, he went off to start a design business, and it was taking him a while to get going because he didn't have a lot of capital, didn't have a network, and so I told him, why don't I just invest and help you out? And so it's him and a partner moved down to Austin and started it, and then kind of similar situation with the other guy with the e-commerce store. We kind of knew each other from he had read Forever Jobless, and then he was at the same meetup as I was in Arizona, and we just started talking, and I told him, if he needed help getting going, needed help scaling it or anything, just to let me know, and and he did, and so we worked out a deal, and I think we just closed that one like 2 weeks ago. So
Nice.
So I'm just kind of getting started with this stuff, and there's a couple other ones I'm looking into, but taking it slow at this point. But I'd like to do at least 5 to 10 of these, kind of slowly, and see learn from them, see if I enjoy it, And then, if it goes well, try and do it on a very large scale. But right now I'm kind of just slowly dipping my toes in and just learning the best ways to do this.
That's really cool. So, so a lot of my listeners, myself included, we don't need too much to, sustain ourselves, and we're looking for financial freedom so we can, do whatever we want. And so, like $2,000 a month, that's a good life in most places that you could have for yourself. So what would you suggest somebody who, has a bunch of capital, sitting around maybe in index funds or something? What if they wanted to, just break out, 25, 50K and purchase something that could potentially provide enough income to live off of? What would you recommend?
I would say it would depend on, what type of, variance they wanted to endure. So in other words, like what I would do if I was in that position would be to start a business with it, knowing that, maybe the business would or wouldn't work. So if they're okay with that risk, I would probably not necessarily use a lot of the money to do it, but start a business from scratch, fill a need that isn't filled right now. If they just wanted to take that money and invest it and use that to basically create their new income source, I think it would be a good idea for them to basically buy an e-commerce store, or there's other passive businesses they could buy. A SaaS business that makes a couple grand a month. As long as they do enough due diligence to know that they'll be able to do it, know that they're not going to buy it and have sales drop out from under them. So it takes a little bit of work. It's not, a lot of those deals aren't 100% passive, but if it were me, I would, maybe there's a deal that they could look into to where, they could create a certain brand or product in China, which sounds hard if you've never looked into it, but it's I know a lot of people getting into that space just because it's the same as a dropship store, except for the fact that you just create a new brand. Takes a little bit of money on the front end and a little time to set up, but it's a lot, I guess, safer and higher upside than doing dropship, because in dropship you're selling the same stuff as everybody else. So although dropship is 100% passive for the most part, it's also, there's less reason for people to want to buy from you as a dropshipper. And that's where my experience is. So I'm talking about e-commerce stores specifically, but there's a lot of different spaces where, somebody could jump in and buy something, spend 25 to 50K, have anywhere from $1,000 to $4,000 a month in income off that. So I think there's plenty of deals like that. I don't know if you want more specific examples, but
No, that's a great. Now, if someone was hoping to just purchase something and sort of do what you did, purchase something and learn from it as well. I know Flippa is pretty much there. It's usually focused on the more lower end stuff. Can you find some good 25 to 50K deals on there? Or are there other places that you would look to buy those types of businesses?
Yeah, Flippa's probably the lower end. So most of Flippa's deals are anywhere from, a $500 website to maybe 50,000. And 50 would be on the really high end for Flippa. So if I was looking for, let's say 25 to 50K, you might find a couple on Flippa, but there's not going to be a lot. So I would start, maybe talking to small website brokers. Most brokers deal in, 100K plus stuff just because they get paid a 10% commission. So doing a 25K deal isn't going to get them a lot of money for their time. However, a lot of times those deals, if they come across them, maybe they'll just refer them off to you. If you, ping enough brokers, you can say, hey, I'm looking for something that's, 25,000. Can you let me know if you find anything? And then what may happen is a broker may come across something, that they either normally wouldn't have taken, and maybe they'll take it and try to work a deal for you, or maybe they'll just send it your way and say, because it's too small of a deal for them. And, maybe they'll say, hey, I have this person who asked me about this, and they'll connect you with the person looking to sell it. Another thing that I did was I did tons of research and would find people who had a lot of stores online. And again, I say stores just because that's the space I was in, but it could be any business. And I would find people who had a lot of different businesses, and I would contact them and I'd be like, hey, do you have any sites that you aren't doing anything with? If so, let me know because I'd be interested in buying them. So what happened for me was, one guy specifically had like 20 sites, and he had 7 of them that he wasn't doing anything with. And so I bought a package of 7 stores. I didn't want anything to do with 4 or 5 of them, so I bought it. I think I kept, like 3 of them, sold off 4 of them, and basically was able to break even on the deal from selling the stuff, plus had 3 passive businesses that I kept. And you'll find a lot of times that, somebody else's trash can be your treasure, if they're not paying attention to their smaller businesses. And I think I gave one example of, it was a horse saddle store. The guy wasn't doing anything with that store, and he lost his deal with the supplier. And, since it was one of his small deals, he didn't have time to do anything with it. So basically I got to keep the story short, I got the deal reset up with his supplier, which took a little bit of work, but then a site that really wasn't making any money at all, might have been making like $100 a month. Instantly, like the next month, we did like 8,000 in sales because the guy hadn't done anything with it. He wasn't paying attention to it.
Wow.
So there's deals like that out there that, it's more work to get into and find the opportunity. But at the same time, if you can buy somebody's junk, chances are that, you may have some pretty good upside there just because they haven't looked at it for a while.
That's really cool. And once you get it, I'm going to refer to one of your other posts here, how to create a business that prints money. You say there's only 2 steps to being successful in business. And step 1 is, you have to know what you're creating and make sure that it's something that's more valuable than anything else that's currently in the market. And then step 2, once you have step 1 done, you can then just figure out how to reach your potential audience. And I think and you mentioned this in the post actually, that, most people are just focusing on step 2. They're just, creating their Twitter accounts and Facebook accounts and worrying about, email lists and things to try to reach an audience, but they haven't figured out how to create something of value that's better than everything else that's out there.
Right.
And the fact that you're successful in this space is just a perfect example of how what you're saying is actually true, because the make money online space is just extremely crowded, but here you came out and you're producing just incredible articles, and you quickly exceeded everybody else that's doing the same thing that they've been doing for years. So it's I think that's a excellent example of how if you create something of really good value, then that's the most important part. If you could talk a little bit more about that post.
Yeah, definitely. So in your example for the blogging was perfect. I mean, I know a lot of, so for example, my blog isn't necessarily a business at this point because I don't try and monetize it yet. But, when I looked into the blogging space, I couldn't find a lot that I personally wanted to read because of the stuff I was into, nobody was really talking about it. And, I looked at the way most blogs were set up, and everyone was kind of writing about the same exact things in the same exact way. So kind of short articles. A lot of people had the misconception that, hey, I need to post 3 times a week. As long as I do that, it'll help my blog or my business. And so the gap in the market was, the way that I could offer more value was, basically taking a totally different approach and writing, 2, 3, 4,000 word articles. Not really worrying too much about how often I put them out, and just covering concepts in depth and talking about stuff that people weren't talking about, and that was filling that need in the market. And so, in terms of the step 2 for that, a lot of times if you can solve step 1 in a big enough way, it kind of works as your marketing in a lot of ways. So in other words, when I put a post out now, people do all my marketing for me. So example, my email list will share it. People will tweet it and Facebook it and, tell their friends about it if it's something that, actually help them solve a need, or they think it will help their friends solve a need. So, a lot of times if you can solve, the value end of it and say, is this more valuable than anything else out there? If you can just get it in front of your audience, they'll do a lot of your marketing for you.
That's great. I'm actually going to quote you because there's an amazing quote in that post. It's actually in your Welcome to Forever Jobless post, but you're talking about how everyone else in the space is focusing on the wrong things, and you say that their audience is looking for food and they're spending all their time telling them how they could theoretically use a knife and fork. Problem is their plate is empty. No matter how great they become with their utensils, it won't matter. They're still going to starve. And that definitely really sums up, like, you're focusing on completely different things than most people in the space, but what you're focusing on seems to be the important part. And I don't read that much in the space because, like I said, it's most of it just seems like, well, I'll quote you again, learn how to sell ebooks to people who want to sell ebooks about selling ebooks. And that's what it feels like. So yeah, your site is just, I couldn't recommend it enough. So really well done with it. And if the listeners out there haven't checked it out, definitely head over to foreverjobless.com and you won't be disappointed. So yeah, we're sort of getting to the end of the interview here. I usually end all of my interviews by asking, if somebody's hoping to pursue financial independence, what would be the one thing that you would recommend? And it could be through entrepreneurship or otherwise. Just what would be one piece of advice you'd give?
I guess one of my favorite quotes is listen and take advice from those you aspire to be like, and ignore everyone else. So I guess part one of my feedback on that would be only listen to people who have been exactly where you want to be, and then listen to everything they have to say. So read everything they put out, listen to every podcast they put out, and basically they have the answer. So a lot of things in business or investing, someone else has done exactly what you want to do already. So all you have to do is figure out how they did it, which sounds maybe hard, but it's actually pretty simple. If you're just willing to put in the work and, read and listen to them and, figure out how they did it. Unless you're Steve Jobs or Elon Musk, you don't have to reinvent anything to make a lot of money. A lot of times you just have to kind of follow exactly how someone else executed it and do that. It's easier for you to do it because someone else has already been there. And I guess the second part of that advice would be, I think a lot of people focus early on, hey, I need to build up a lot of capital. I need a lot of money to, start a business or to invest, whatever it may be. I think knowledge scales a lot quicker than money does. So what I mean by that is a lot of people who maybe get a job and try and save up money, and they're not, a lot of the skills they learn won't help them as an entrepreneur or as an investor, where, let's say the same person got a mentorship with someone exactly what maybe it's maybe it's in China, I don't know, whatever it is that they want to do. But if they got a free mentorship with that person, by the end of 6 months or a year, the knowledge that they gain from learning is going to scale a lot quicker than the money they would have saved up in their job. And so I think people underestimate how important it is to be knowledgeable on subjects and to have a network. Networking's another super important thing. I know I'm kind of probably giving off way too many, but like networking and building knowledge up and building a network will scale substantially quicker than having a little nest egg will do.
That's awesome. Yeah, no, that's all great advice. So if people want to learn from you, what's the best way? Sign up to your email list?
Yeah, they can head over to Forever Jobless. Like you said, sign up for the email list.
Excellent. I really appreciate you taking the time to talk with me today, Billy. It's great stuff. And like I said, I love your site. I love what you're doing over there. So I'm really pumped about the new podcast. So thanks again.
Yeah, appreciate it. Yeah, thanks a lot for having me on.
I hope you enjoyed my interview with Billy. He's a really interesting guy. I actually had the pleasure of meeting him in person last year in St. Louis, and we chatted for about 10 minutes. And just a really smart guy, and his blog is just incredible. So if you haven't checked that out yet, definitely head over to foreverjobless.com. I know we chatted about some of the articles, and I'll put those links in the show notes, but all of them over there are just excellent. So take a look at that. As we mentioned, he's also releasing a podcast today, which I'm really excited about. So after you finish listening to this, just head over to iTunes and check out what he has on offer. I don't know exactly how all the iTunes stuff works, but I'm pretty sure that if you get a lot of listens and comments and things like that in the first week, then it really helps put you on the charts as far as iTunes is concerned, and help spread the word. So to thank Billy for coming on the show, just all you guys out there, head on over and leave him a nice review and take a listen to his podcast, and that'll really help him out, I think. speaking of reviews, I have to thank Ree for leaving a really nice review for the Mad Scientist Financial Independence podcast. It's been a few months since I've posted, and I hadn't really been thinking of the podcast, but I just checked out iTunes one day, and there was just such a nice review that it actually really prompted me to start arranging more interviews and things like that. So yeah, thank you for all the kind reviews of this show. That it always helps, and it's always nice to see, and it definitely motivates me to keep producing more. So I really appreciate it. So yeah, thanks a lot to Billy again, and thank you guys for listening. And I'll catch you next time. Thanks.
The expected value of X equals finance.